Now to the energy markets, where the possibility of a recession is sparking concerns about the future of oil demand. Join us now to talk prices and inventory levels, kind of an update. It's almost like an episodic appearance because Jeff's on a lot. Jeff Currie, Goldman Sachs, Global Head of Commodities Research. Last time, Jeff, we spent almost the entire segment talking about the supply side of things. That's all we need is for demand to start rising. Actually, maybe it is what we need for the Saudis anyway, because it's tough to even stay at 70, even with the cuts.
Well, I mean, if you look at the fundamentals, they're turning the corner. I mean, you had an 11 million barrel draw this week, 6 million barrel draw the previous week. With the exception of WTI and Brent, the things you see on your screen and what we all talk about, every other commodity has turned the corner. You know, whether if it is gas oil, natural gas in the U.S., natural gas in Europe, grains, copper, all of them seem to have shredded that concerns around the recession. So you're probably asking what's unique about WTI and Brent that they haven't rallied. They happen to be the type of crudes that are very rich of the type of fuel, naphtha, that goes into petrochemicals. And the petrochemical space is one that's probably under the greatest duress, you know, given the surge in plastics demand that occurred during COVID and its give back time. And so that weakness is weighing on WTI and Brent, plus some refinery outages that take that type of crude. But this should be temporary. Our view is that the strength in the fundamentals, you know, should put upward pressure on prices back into the 80s on a Brent basis. And, you know, we're sticking with our 86 year-end target on Brent. So we think the fundamentals will eventually, you know, materialize in WTI and Brent, and they'll follow the course of the rest of the commodity complex.
No, I guess only the bond market is really signaling where are we seeing a recession? And I don't see how that would keep. Go ahead.
No, there's not much evidence out there of a recession besides, you know, manufacturing is weak, and that's my point about petrochemicals. But I do want to emphasize that the rally we've seen across most of these commodities was really taking off that short position. It was short covering, you know, with the diminished views around a recession. I have not yet seen anybody embrace this rally. It's been like an unloved one within the broader commodity complex because people are unwilling to embrace the bullish view. And I think that needs to occur before you can really go to the next level. But, you know, most of that was, you know, over the course of the last 3 to 4 weeks, investors that were short commodities around a recessionary view have reversed that view, but have not taken a bullish stance.
I think you could make a lot of money if you're right, Jeff. I'm trying to think of how our viewers should do that. You can just buy the futures outright, or I guess you could buy some calls. They go out how far? Because 69, it looks like it could be right for, like you say, 80. It looks like the low end of a range. I can't imagine. Could you see it going under 60? What could?
Yeah, I mean, you had priced in a pretty bearish scenario, you know, going back 3-4 weeks ago when we got, you know, I follow Brent when we got down into, you know, actually almost got a 60 handle on Brent. But I think, you know, in terms of thinking about how bearish it was, you had just priced in, you know, a 250 million barrel liquidation of spec length. You had the end of the SPR release. You had all of that sanctioned oil coming on line, which was Russian, Iranian, Venezuelan. All of that's behind us now. That's why the inventory stats are beginning to change. And none of that, what I just listed off, is persistent. SPR draws have going to turn into SPR bills. The destocking has ran its course. It's had its impact on the front end of the curve. And then when we think about the sanctioned oil, there's no more Russian oil, there's no more Iranian oil, there's no more Venezuelan oil without substantial investment, you know, or big shifts in terms of the current sanctions. So we don't see any more of this as being a drag on the price. And, you know, we would argue that the fundamental picture begins to materialize in prices.
What's your baseline outlook for China, Jeff, embedded in that $86 price target for Brent? I'm just curious because it can be perceived that the Chinese economy is much weaker than anybody expected, or on the flip side, that is going to make central bank efforts to revive the economy much stronger.
Well, I mean, it's not as gangbusters as everybody thought at the beginning of the year. but it's not nearly as bad as when you look at the broad, consumer, put it all together. Oil demand, it got near 16 million barrels per day, fell back into that 15.8 million barrels per day. So it's not like it's collapsing back into the 14s or 12s like it did last year. The services is holding up and manufacturing. Here's what I like to say happened in China. The Chinese consumer didn't get the stimulus checks like they did in America and in Europe. So they didn't come out guns a-blazing when lockdowns were lifted. In contrast, the factories, all you had to do is get the people to come back to work, flip a switch, and you're producing. So you ended up with too much production back in March and April and too little demand. Margins came off, the system corrected. But you look at high frequency data like exports of manufactured goods out of Korea. It says, hey, you're probably rebalancing, and it's not going to be a catastrophic situation. It's just not as gangbusters as what we would have thought at the beginning of the year.
So the environment just for producing is it better than it was? I mean, Buffett's buying more oxy. Prices when they're high, they usually cause people to even do things that the government is trying to sort of tamp down. You're still going to do it in prices like this. Are we good? Are we good in terms of production? We're going to hit new records this year or next?
When you look at the U.S. recently, it's been struggling. You look at the production that they were able to bring online. Going back to that price spike.